There's times in our lives we all have pain, we all have sorrow. But if we are wise, we know that there's always tomorrow. Lean on me when you're not strong, and I'll be your friend. I'll help you carry on, for it won't be long till I'm gonna need somebody to lean on. You just call on me, brother, when you need a hand. We all need somebody to lean on. I just might have a problem that you'll understand. We all need somebody to lean on. Good morning, fellow billionaires. It's still 5150 with your morning update for Monday, September 21st, 2020. Had some Lean on Me there, originally by Bill Withers, and a later rendition that I did this morning, of course, was by Club Nouveau. But in either case, it is the proper message. It is okay to rely on one another, or rather, lean on one another to make it through these tough times. Or in the case of stacking, sharing the knowledge and opportunities available, all right, to members of our community whenever we're able. And of course, the road goes both ways. Early on, I realized that it was important to put my pride aside and ask for whatever help I felt there was. Whenever there was a need for help, I just asked. I didn't hold back, especially in this endeavor with stacking metals. It didn't matter if it diminished my stature somehow, or it somehow I didn't look as good as I wanted to look. It didn't matter. Image is the least of our concerns when it comes to pursuit of sound money. I mean, image is important, but honestly, this pursuit, it takes precedence over everything. Well, today I think we have a topic, a real-world account, a little something different for you today, from a subscriber that I think needs our attention. We had a brief dialogue, me and a subscriber, and though I tried to give the best answer I could about his question, I'm sure I missed something. So I'm appreciative if you guys could add to it in the comments or just give me your thoughts on it. But we're going to go ahead and look at these rounds here, okay, and maybe check out the markets, and then we'll address the issue I've been alluding to. All right. So today we have a hodgepodge of rounds and stuff available for you. Okay, we've got some Molin Labe series coins out of the Intaglio Mint, and of course you guys know Molin Labe is basically the moniker and the story of 300, where King Midas took a handful of his best elite Spartans, and they went out and they really socked it to the Persians. Just handed them their lunch, for such a small unit. And of course, it's one of the most epic, underdog battles of the ages, historically speaking. All right, what else do we have here? Oh, how about some U.S. Assay Office rounds from 1981? And these, of course, are out of the U.S. Assay Office. You can't get these anymore new out of there. They don't produce anything, but the ones that are out there on the open market you can get for less than $40. And I think they're worth every penny. Whenever I see them, I try to grab some. And let's see. Oh, here we go. How about some Provident Year of the Boar rounds? And this is the front side of the Boar rounds. And this is the back. I think at Provident, they really went out of their way to create a nice design for the Year of the Boar rounds. And they do that for all their lunar coins. I think the Year of the Rat, it has like some of the same imagery and designs in the back and stuff. And so for a generic round that originally retailed for about $15.70 back in the day, they did quite a nice strike on it. All right. And then, of course, we have some mock-ups of famous United States Mint designs as well. I believe these are from the Sunshine Mint because they have that security feature on the back. And there's the front of the Walking Liberty effort. That's a mock-up of the U.S. American Eagle, the United States American Eagle. And then, of course, the Standing Liberty design, which is, I think, a Golden State Mint offering, and that's just a Standing Liberty design for a generic round. And then, of course, the St. Gaudens Liberty round, that is the design after, of course, the gold eagle, the United States gold eagle out of the U.S. Mint, and that's the backside of that. Okay, so Go ahead and take a look at the markets here. Stock futures right now are deep, deep in the red, guys. There's so much stuff going on. I will tell you what I know, and then I'm going to tell you what I think. Okay. Last week we had, these crazy realizations come out last week about valuations in some of the companies like Apple and Tesla and Facebook, Uber, just to name a few. But these guys have been piling on multiple gains in their market caps all year in the midst of a pandemic that has resulted in record unemployment and, by extension, abysmal patronage in sales. Nobody's been buying anything. Nobody's been doing anything. You can't have it both ways. And the price to earnings Grim Reapers appears to be ready to harvest. So please invest wisely, especially if you're in stocks and you're managing your own 401k. So please invest wisely. Now here's what here's what I heard. So I heard that apparently some European banks are having a lot of trouble after they have come up on accusations of doing some very shady practices and stuff in terms of buying U.S. stocks and global stocks in general. Banks are not supposed to do that. They have agreed they wouldn't do it. So now all of a sudden, the story's trotted out by, I think, Reuters and BuzzFeed, saying that European banks are being called on the carpet for their malpractice, their financial malpractice in buying U.S. stocks or stocks in general. And so I guess a lot of the customers, a lot of their, big money holders, shareholders don't like that. They're finding out that there's been some stuff going on in the background. There's a number of ways to digest this. I mean, look, here we are. We're back a year from the time that the banking repo crisis happened. And the banking repo crisis, guys, as you know, from a year ago, is basically the overnight lending structure in banks. They shift cash around so that they can all function during the day to do banking operations and do lending and stuff. Well, that interest rate was really low for a long time because there was trust in the banking system. But now it's, somewhere from, it went from 1%, now it's like 10% overnight lending rate. Overnight. That isn't a count, that is in a day, 24-hour period, 10%. And so central banks, especially the Federal Reserve, had to come in and backstop the money pool to make sure that it keeps moving around between the banks because honestly, they don't want to lend to each other. And ironically, one of the banks that was having most of the trouble during this repo crisis, and I think actually triggered the repo crisis, which is repo means repurchase agreements. So they're basically, just moving money around from one bank to another. This repo crisis, I think, was triggered by Deutsche Bank. Deutsche Bank had been in trouble for a long time, long time. I think they had an all-time stock evaluation of $188 per share during the height of the housing boom, and then they'd gone down to as low as $5 a share. And to me, if you're, 2%, above water in your valuation versus being at 100%, you are in default. You are no longer a company. If you've lost 98% of your value, you're done. But central banks had stepped in and they've been keeping Deutsche Bank alive because Deutsche Bank holds a lot of derivatives. And those derivatives, maybe belong, are being held for another bank. If they end up being triggered, which is insurance, derivatives are insurance for banks to try to stay alive. They trigger that derivative cycle. It's going to spread from one bank to another, to another, to another, and cause a huge problem in the monetary system, which we're on our way there anyway. But all of this stuff you see now is to mitigate the possible, end game that's on the way. So in any case, so stock futures right now are down quite a bit, almost 2% on the Dow and 1.5%, on the S&P 500. Nasdaq is going to probably take the lead today at over 2% in losses, and we'll see how that develops in the 10,000 range that the Nasdaq is in right now. So yeah, Dow futures are at 27,087, which is very close to the 2,600 flat line. And 26,000, I'm sorry, 27,089 for the Dow is the price right now, down $513 or 513 points at 101.85% down. S&P futures are down, like I said, 1.5%, 50 points down, bringing the S&P futures down to 3266. Which is still a good range, but it's on the way down, and we've been going down for a while. This is going to mark the fourth week of losses. If this continues, we're going to be in the fourth week of losses in the stock market. And if that right there is not a bellwether and a signal to you to try to invest wisely, I don't know what to tell you. Okay, and then you want to move along to the commodities. Commodities right now, oil is actually at $40, which is an improvement over last week. but it's down 2% right now, 84 cents down to $40.48. While gold, of course, is right there in the commodities, and it's down $23.55, or down 1.2%, at 1,938. Okay, silver, of course, the metal that we are most concerned about, is unfortunately leading the way down, as always. As it leads the way up, it leads the way down. And it's actually fought its way back from a loss of about 75 cents per ounce spot silver, and it's climbed back up to only 65 cents down per ounce at 26.47 is the current spot price, and that's almost 2.5% down. So, what are we talking about here? We're talking about stocks are down, okay? Precious metals and commodities are down. And oh, look at that, the dollar's up. Okay, the euro's taking a pounding right now down about 55 basis points. The dollar is up about 35 basis points in a time when we have record debt and all kinds of craziness going on in the banking system. And just for the record, say in the case of the United States or the debt clock, the debt is valued in dollars. So the stronger the dollar is, the harder it is to satisfy that debt. So you want to talk about, the central banks, especially the Federal Reserve, being in a tight spot. They have to try to keep the dollar solvent so it doesn't take the system down with it. But at the same time, they can't let it get too strong because everything that we owe is valued in that very medium. So they got a decision to make. And when they do the fourth turning, they've got a direction to go into, and I am interested to see where they're going to try to take this thing, hyperinflation or deflation. We'll find out. All right, so let's just keep our eyes out for dramatic breakthrough in metals, I think, this week. I think what we're looking at right now is probably the final smackdown, or one of the final smackdowns in metals. If we get down into the $23 range this week for silver, it is over. I'm declaring the manipulation over, and we are on our way to the races. We're off to the races at that point. I don't think we'll see silver get down that low. I don't think we'll see gold get down to the 1800s. It could happen, and if it does, you know what to do. If there's a smackdown, you want to smack the stack. Okay, you want to stack that smack. You want to put that, take advantage of those prices and get that metal into your coffers as quickly as you can, as quickly as you're able, whatever you can get. Grams, halves, dimes, doesn't matter. All right, so we'll keep our eye on that. And remember, all those physical delivery orders that are not satisfied by the COMEX for the month of September are not going to go away. And the clock is ticking. Today's the 21st. All right, so back to our topic today. We're going to go on and get back to our topic today. Like I said, it stems from a message posted by a subscriber yesterday who is looking to purchase a home next year. And the subscriber writes, and I quote, "I want to buy a house in mid to late 2021, and I'm in the process of saving up enough for a down payment to qualify for an FHA loan. I also want to continue stacking silver, but I'm still far away from my goal for down payment. I recently accepted a better paying job, which I start next week, so I'm in the process of increasing my income while simultaneously cutting my expenses. Is it wise to put precious metals buying on hold until I save up enough currency for down payment, or should I balance the two and continue stacking?" All right, guys, now, to be fair, I did give my initial gut response telling the subscriber that essentially stacking silver is the best solution. It's just the answer to so many things. But it led to a lot of nuances and a lot of questions. So, we've seen repeatedly, how easily silver can outperform cash, especially in this last jump that we had, right? And that over time you can expect much greater returns in silver over inflation ravaged fiat. So, fiat capital, the dollar and stuff, it loses value. And so silver outperforms that pretty easily, especially now. But what if you're basically starting out at ground zero? And, the subscriber, he had made the case later that his current cash savings wasn't that great, that he didn't want to sell any of the silver he'd already acquired, and that the eligibility for an FHA loan was, in his estimation, projected by their earning ability over the next few months with the new job. So with that as a backdrop, not having a huge cash savings right now, but working on it, not wanting to sell some of the metal they have right now because, they just don't think it's a good time to liquidate. I get it. Let's ponder some questions that went through my head. So the first question that went through my head was, assuming a starting point of today, September 21st, 2020. As the savings launch to where you'd start your savings, say today, would it be possible to stack in a way that would give you an advantage when you're ready to buy? The sell price and the buy price for the commodity market are static, so no advantage there. The only way I see to stay ahead of this trend is to try and purchase as close to spot as possible and finding discounted sources of silver, like Silver Joker International Stacker would, and then selling those discounted silver, findings at a higher price to the intermediaries online or, Amazon or eBay. Okay, so you buy low and you sell high wherever you can. I brought up the idea of buying vaulted silver from a trusted retailer, which is not a depository. It's, vaulted silver from, APMEX or from Provident or JM Bullion or even a Money Metals Exchange. It's not a depository, which I talked about before. So I'm going to go ahead and clear that up. Vaulted silver or vaulted metals. Basically, you're simply buying bulk silver from that establishment. Okay. And that's their own vaulted stores. So that establishment has their own vaulted stores of metal, and you're going to buy it from them, but you're going to leave it there for a minimal storage fee with the option to take delivery if you so choose. But again, you're up against the clock to purchase sooner at lower prices in order to sell back higher later. Okay, so that was my thought about the first part. Question 2: what will be the state of the housing market a year from now? Now, before I answer that, I want to submit a suspicion. It is my suspicion that central banks, in particular the Federal Reserve, has issued a shadow backstop order to the real estate market, essentially telling them to ignore the market forces of demand and thereby distorting any remnants of fair value in home prices. You guys can see this where you live and everywhere you're at. You can see that more people are getting laid off from work. However, housing prices aren't going down. That doesn't happen organically. Something is being said to make this happen, I think, in the background. All right, so commercial real estate, residential real estate, you guys have seen and can attest to the rate of abandoned storefronts, for example. And that's only matched by the number of new construction projects going up. It almost seems like some of the Ghost City projects from China. I mean, there is no demand, there is no clamor for more storefront space, more strip malls, more business buildings, none of that stuff. But if you look around your town, look around your areas, you can see it's happening a lot. All right. So this kind of activity we're talking about, this infrastructure building when there is no demand, it will fool Mr. Market for a little while. But sooner or later, something's going to break. Either in the overburdened dollar or the resource sector, something big is going to break. And, look, nobody's hardly producing anything because most of the people, the workforce is laid off. So just don't give me this idea that there's this huge demand and the economy is booming because we can see the malaise around us. Excuse me. So I think later there'll be a glut of houses available, but unattainable because the loan system that they're valued in will be wrecked beyond recognition. And that is a huge problem. So that brings us to question number 3. What will be the solvency of the real estate programs by then? FHA, Freddie Mac, Fannie Mae, VHA, take your pick. All these programs are tied to the banking system, which is under a lot of pressure right now. You guys can see it in the markets. Okay, Barclays and Deutsche Bank and Bank of America and JP Morgan. All these banks are under pressure today, and the pressure is going to get worse. So what is going to be the solvency of these programs that they're part of, they carry the loans for? So all these loan programs, they're tied to the banking system. And look, and by the way, which has done an outstanding job of appearing unshaken. By all the economic breakdowns we've seen in the last 2 decades, the loan system seems like it's, bulletproof. All right, but like the anatomy of the Death Star, when it explodes, where it first implodes on itself and then collapses, then explodes in a spectacular supernova of space dust, so too I believe will be the banking system. Once quadrillions of trigger derivatives, and these derivatives we talked about earlier, the banks carry as insurance, finally break free of their artificial dollar prison and blow the credit/lending system to kingdom come. So, excuse me, what I think we have here, people, is an old paradigm way of thinking that keeps the illusion alive, keeps the dollar dream alive. The idea that things can go on the way they have and continue in perpetuity. And seriously, my hat is off to those in power who are trying to hold back the tsunami that threatens to wash away all of the toxic financial instrument garbage. Long-term fixed rate debt, long-term fixed rate debt, long-term fixed rate debt. That is, such an instrument to get in trouble if you don't know how to handle it. But anyway, so there's a lot of this toxic financial garbage lying around out there. But in the words of the famous poet laureate Silva Joker, and I quote, "The future is still on its way." That's right. I have to concur in that this is a biblical financial reset that can't be stopped. It's on the way, which takes us back to the basics. We no longer have the luxury of dictating the time in which we will make big economic moves anymore. We don't have that luxury. Those opportunities will make themselves known to us when they rise from the global economic reset ashes. So what do you do when you can't call it? Meaning the state of affairs in a year or even 6 months away. You stack. Starting to notice a theme here? You stack. You stack and you stack and you stack, and then you wait. Ensure, do all the research and scoping around and scouting around while you're waiting for that opportunity to present itself to you. You just kind of look around and see when something that you like comes up and check it out. But actively looking now to get into the system now while it's doing what it's doing, yeah, I think you're playing their game and you don't. You want to play your game. All right, and by the way, like we were talking about this morning, team up with others in a community with the same goals. If you're looking around and you see somebody else like, yeah, I'm thinking about buying a house too. I'm thinking I want to do something too. Kind of collaborate with them or even form a group. All right. And so, yeah, team up with people with the same goals and stuff, in this case, to purchase a home, like the subscriber was asking. And you want to do that later, of course, when the opportunities start to present themselves. And you all take a look at it and see if the best thing is out there. Or if somebody gets a tip on something, they can alert somebody else to it, like we've been doing with precious metals prices, everything. All right, working as a community. Or rather, like the song says, lean on me. That's right, lean on me. When it starts to get tough, when the going starts to get tough, we're going to see how silly it was for us to compete against one another over things financial when all the while the real monster, which is the banking system, is standing in the shadows, eyeing us up to consume us, to eat us alive. So since we can't call it, just remain calm and keep stacking. I know it sounds simple, it sounds mundane, but it's true. The opportunities will come to you. You will not have to go to them because they'll naturally seek out your premier currencies, gold and silver. Okay? All right. I'm Silver5150 telling you guys, your stack is not whack, and at just 15 ounces to your name, puts you 99% ahead of the game. Thanks for tuning in as always. And I ask that you please like, share, subscribe, comment, and check us out on Instagram, building that up. Go on out there, get her done, stay safe, and we'll catch you tomorrow with another update. Cheers, guys.